Wednesday, May 10th, market analysis, Stan Ehrlich. We have some pretty bearish activity at the moment in stock market indexes. And there's some very important information I want to provide to you. I think it's very early in the game and it could be very bearish. So let's start with the stock market indexes, which is what I always do. And then we'll go to futures, and we got some new signals in futures as well. I think one of the grains, silver, and the third bearish one is silver. Okay, so the S&P 500 is currently down 175. Now that in itself is not particularly a big deal, but the fact that it opened stronger than the last 5 days worth of highs, this is a 15-minute chart on your left side, and the opening 2 minutes, frankly, was the high of the day. And that was higher than the last 7 days, I believe, 6-7 days. And then it just failed. It came all the way back down to unchanged to lower on the day, rallied some, and now we're looking at the lows of the day almost, low and last almost. Again, down 180. Not that it's going down super fast, and it's not like collapsing or anything. And the only thing I don't like is the fact that it's a bearish engulfing. And it's covering a couple of days worth of activity. Let's go over to the right here and look at the daily data chart. This is now going to be the story for the next minute or two. We have a bearish engulfing day today. Normally, bearish engulfings are bearish. That's why they call them that. You can't necessarily tell how much bear move you might get out of it, how long it's going to last, but it's supposed to go down. If these fail, they can be very bullish because it tricks traders, investors, and people like me, technicians. But I know better to stick to my bad decisions. I'm flexible. So anyway, let's pretend this bearish engulfing is for real. I'm going to show you right away here the, DIA and the QQQs to see what they're doing, because that's pertinent as heck. We have in the DIA also an outside down day bearish engulfing. The reason it's not red is because we didn't get overbought, and we're in very neutral territory for the RSI. So there's room both ways, so to speak. A close right here in the DIA is going to be the second lowest close for a month. And it doesn't have too much further to go to make a new low for over a month. But that's a gap. Gaps are almost always closed. Is this gap pulling the market down, and it's going to stop going down at around 329 and turn right back up again? Well, I certainly am going to watch for that, but there's other problems. There's another gap down here to potentially close in the DIA. So there's two magnets trying to pull the market down. Gaps are kind of like a black hole in space that tend to suck the price action back into it. But, and I've seen many, many examples throughout these YouTube recordings over the last many months that have worked just great for gap closures. Now, what about the Qs? The QQQ does not have a bearish engulfing yet. It might by the end of the day. We're not far above yesterday's lows, which is the day before almost exactly as well. So not only will the Qs maybe have a bearish engulfing, but that's including the fact that it made new highs for was 9 months, I believe, this morning. So new high over quite a number of months, and then failing miserably like this is not particularly a good sign. Often called a false breakout. And that's what may have happened the last couple of days. There wasn't any great amount of strength there. It just kind of got up there and moved up a little bit more and satisfied my dates and so on. And then all of a sudden, this is not good. So watch the Qs, see if they have a bearish engulfing, and they need to close all of them below the previous day's close in order to stay bearish engulfing. The engulfing won't change. It's either bullish or bearish, higher or lower close. Now, there's something else here, and it's really important. Let's go back to the spider for a moment and look at the daily data chart. The last month or so, we had a high on April 18th. There it is right there, around 415.70. market came down a bit. Then it went back up again a week or so ago. Actually, I think it was 7 days ago, and made its higher high and got up to 1760. That's not too much higher than 1570. Now we had 4 days ago a low almost the same price as the previous low, which was on April 26th. So there's a little double bottom and a flat little area of support. And you know, if you draw a line across that, it would be almost flat. But what happens if this bearish engulfing is the last shoulder high? That is a shoulder high on April 18th. The head of the formation is May 1st, and today is the last shoulder high. The timing is very good. We could have used 2 more days to the right in time to be perfectly symmetrical, same number of days or amount of time from the shoulder to the head, and from the head to the last shoulder low, last shoulder high, which could be today. It might be, looks like. This is how they start. So we have a head and shoulder top, maybe. And you have a measurable downside objective. I'm just going to do this eyeball-wise real quick, and it would be something in the area of a little 390s, 391.2, something in that ballpark. I'm probably not off by a point or two, but that's the minimum objective. Now, let's pretend that keeps going. We have something much more serious. What about this rally high that was on December 1st? Yep. And the top that was a higher high, February 2nd. The high we just saw a week ago isn't a higher high. It's very, very close. The timing looks okay, not great. And this could be a much larger bearish formation. I don't need to go into it today, but I did want to mention it. The small formation, if it works on the bearish side, could drive the market low enough to break out of the larger formation. So it's not uncommon to see formations inside of formations. And that's exactly what we might be starting. And today's the first day I wanted to mention something like that. Okay, I'm crazy. All of that's not going to happen. So the only other alternative is sideways or higher, and I guarantee it's not going to go sideways. So we're going to break above today's high soon if the bearish engulfing does not work. And it's probably going to continue very strongly, very quickly, because the major trend wasn't damaged and the long-term trend is still up. And you still have higher lows since October 13th's profoundly major reversal in ER bullish engulfing. So we are between a little bit of a rock and a hard spot right this moment. The next few hours and or next couple of days, today's Wednesday, maybe by the end of the week, these questions will be answered, and I'll have something much more definitive to say. But I am wanting to bring to your attention these bearish engulfings and the potential one in the Qs could be real serious. We're bouncing a little bit right now. We're down $1.90, $2 maybe, $2, and now we're down $1.20. I need $2 or $3 up or down from here to be a lot more interesting as far as the story is concerned. So let's go to the, just a moment, please. Let's go to the futures markets now. Of course, we start with the S&P 500, and it's an outside down day, of course, like the SPY or the E-mini. So I don't want to go into duplicating my commentary. Next chart is bonds, which is rallying nicely, and it is coming back up off of support, which we've talked about many times in the last few weeks. So I like that. Remember, my opinion is that the bond market is forming a large long-term bottom and is going to break above that red zone, which is probably the top of its 134, and start to move up dramatically. Major bullish breakout is what I'm looking for. 1 or 2 months, maybe, a little earlier than that. And the 10-year notes we're looking at right now is almost exactly the same thing as you might expect. It's just a little bit stronger, a little bit faster. Next chart is crude oil, crude oil, which bounced off support at 6,500, give or take a squeak, a few days ago and bounced into a resistance area and now having some trouble last couple of days. So I think it's about to turn back down, make a new low for the trend, and that's exactly what I would expect. I'm bearish on crude, of course, and in the heating oil, almost the same commentary, up against resistance, got oversold, looks like it's about to turn down. Next chart is natural gas, and its downtrend is very mild. It's very low already, and I think it's going to continue to be going down, but slowly. Next, gold and silver and platinum in a moment. Gold has had some problems up here. It can't seem to make any trending headway for the last several weeks. So it could be topping out, but I don't have any reversals, don't have any tops. I got overbought conditions. I don't have any major breakouts to the downside. And I got minor new highs, but certainly not at the previous rate of change until it started to slow down in middle March and late March. So now what about the silver market? Well. We have a third bearish engulfing ER official sell signal, period. I keep mentioning occasionally that we have these signals cluster. That does not guarantee this is topping out. I think it's fair to say that the odds are growing that that's the case. To be a little more convinced, a little past tense, would be to close below 24.67. 24.7. Closing below that is going to be a breakout of what is now, at the moment, a double top forming. And this bearish engulfing ER sell signal, I think it's fair to say, is like a nail in the coffin. We'll see. Obviously, I'm short from the high, and we picked both highs in this double top formation, double top so far. Looks very good in terms of the early stages of developing a pretty darn good break. And by the way, this is probably going to push it all the way back down into the lower ranges we were in March. Next chart is platinum. Now, we had one bearish engulfing ER sell signal, didn't work. For half a day, day and a half, something like that, you could have made some money, but it's not, a longer term. But now, after today's significant rally, very close to the highs a couple, 3 weeks ago, you got a potential double top. That's probably close enough to call it a double top. There's no rule as to how close you've got to have it or what percentage closeness you've got to have it from the previous highs or double bottoms, lows. Just close. And that's pretty close. And it's not doing too good. It's just slightly higher in the day after being up quite a bit more than this earlier. So this could be a high day. It came close to overbought, but didn't get there. I think it's turning down. Next is high-grade copper. Trying to bottom out, not doing very good at it. Bullish engulfing worked for a couple of days, a few days ago, and now it's starting to break into new low or almost break into new lows and new low closing prices. This should be a new low closing price for the trend down, implying tomorrow is going to be making new lows, if not by the close today. A bearish on high grade. Previous buy signal worked a little bit. It's fair to say there was opportunity for 2 days or so to make a little bit of money, but too bad it didn't work a lot better. Not like the one, for example, that we had way back on September 28th of 22. That worked great for a week and a half or so, and was actually, when everything was said and done, the low for months to come. Next chart, soybeans. Had a bullish engulfing a few days ago. Didn't really work very well. Now we're sinking again. This market's acting like a trend is kind of persisting, not just sideways, but more on the downside. We could be closing at the moment at the second lowest close on the move down since that sloppy top that was in December and January, February. Which contained a bearish engulfing that worked okay for a few days. So I'm bending bearish here. I don't have a signal. And obviously breaking below 1376 would be very bearish. Next chart. Bean oil. Bullish engulfing worked for 2 or 3 days. And now I have my doubts. Trend is down. Trend is your friend. We had some decent buy signals that got some decent rallies, but they didn't change the trend. I think we're going to see new lows very soon here. Next chart is soybean meal. We've already made a new low for the trend for several months here since December today, but it's a little oversold. So we might not go down very much at the moment. It's due for a little bit of a rally. We had a buy signal that didn't work at all 2 days ago. So that's bearish in itself. I'm looking for lower levels, probably down to 390-ish. Next, corn. Aha. Today is the second bullish engulfing buy signal in the corn market in 1, 2, 3, 4, 5-day period. 5 days ago, we had the one on the bottom. Not only was it on the bottom of a big break after a bearish signal, by the way, but it was right at support, creating the beginnings of a potential double bottom. But we need to obviously get all the way up to 646 and stay there in order to break out of this potential double bottom. But I like two buy signals close by like this and the possibility of the double bottom forming. Keep an eye on this one. I'm obviously friendly to maybe bullish. And if I'm bullish, then I'm probably going to be bullish up to $7 or something. But very friendly because of the reversals. Even if we get back up into this resistance area and stop, these two signals will have been good. Next, buy signal on the bottom. Wheat. We have a tiny lower low for a couple of days and now around unchanged. It looks like it's trying to gain some ground and be higher on the day. No damage done to the buy signal. I'm friendly here, at least up to resistance, probably 728, at least 677-ish, which is not very far away. So I'm thinking the likelihood is 725, 730, something like that. Next chart is live cattle. We have a sell signal almost at the top of the market. We had a rally afterwards that failed to hold. It made a new low only a few days ago. But the rally we've had in just the last couple of 3 days, 4 days, it looks like it's failing. And I'm thinking we're going to see new lows and down to 160 and below 160 very, very soon. Toppy situation, we're not oversold or anywhere close to it. I'm a little negative for the next week or two, I suppose, but the trend is up. I mean, the long-term trend is your friend, and we'll see if we don't get buy signals that's somewhat lower soon. Next, live hogs had a bullish engulfing yesterday. I told you yesterday that this was a good buy signal potentially, and I pointed out the green dots. That's where our bid is. It's a mathematical formula that was a family recipe from my great-great-great-grandmother. Anyway, it came down within 3 ticks of the bid and dropped 3 ticks below the bid and is now starting to go back up. We bought essentially the low of the day on this dip because of the ER signal formulas, and so far so perfect. I now want to see, obviously, nothing but up. Sideways, I can stand it, but not for long. Up, definitely. And by the end of the week, I'm expecting it to be above what is the high of the day so far. Period. Okay. By the way, we will be showing you in the, probably next week or two, some of these strategies that I've been talking about, like this example, where in the same market, lean hogs, we had a buy signal just like the one we had yesterday. It came down close to the middle of the range, just like it did on April 24th. We caught it. You see the yellow trailing stop on the way up. You see the little green line, which connects the entry point with the exit point. Green means it's a bullish trade, or it made money, and bearish red would be a losing trade. And I think I've got one of those over here. Yeah, there's a little bit of a losing trade there. But I will show you examples in the days and weeks and months to come, so you can get a little bit better handle on the concept here. This has been great. Next chart is, come on, okay, here we go. OJ, oversold, don't run after it. Probably about to bottom out, in a little bit of support, trend is up. I'd be looking for reasons to be a buyer here. Next chart. Bought now, overbought on cocoa at the moment. Probably going to have a little more carry through to the upside, but in a few days or soon, I would expect it to be around today's lows, or maybe even a little bit lower, down to 2870-ish. That would be a decent place to be a buyer, as long as nothing super bearish happened in the meantime. Next chart, sugar. Trend is up, maybe a double top. It got unbelievably overbought, huge. You don't see markets in the 90s on a daily data RSI very often for RSI levels. And we got up to 92, 93 on this huge move up. It took a while for it to finally catch on and top out, but there's a chance of a double top here. I'm looking for higher prices. I can't help it, but I see the possibility of a double top, so I'm going to be very, very quick to start getting bearish if this strength stops and it starts to turn down. Next chart is back to our E-mini S&P 500, which is bouncing back somewhat. Ladies and gentlemen, we're only down 50 cents for the day on the S&P right now. I'll flip back real quick to the index page, and we'll look at the 1-minute charts. We're about high and last for half an hour or so, but that's still not that big a deal. Closing higher on the day, simply anything higher than yesterday's close on these indexes will not be a bearish engulfing. It will obviously be a bullish engulfing, and everything will change as far as the expectations are concerned. That would turn me bullish, but it's not happening yet, but it could. Remember, we're not down very far, and my longer term bullish expectations haven't gotten hurt whatsoever yet. You have a great day. Talk to you tomorrow. It's going to be interesting.